Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. Dollar week after a soft US inflation data, focus switches to Fed. So yes, my dear friends, after the CPI data, we saw sharp rise on the chart of gold, Euro USD, GBP USD, and sharp fall on the chart of DXY. So here you can see that the US dollar struggled to gain foothold on Wednesday after a sharp dive overnight on cooler than expected inflation data, which fueled expectations that the Federal Reserve will chart a moderate rate hike path later in the day. That is today. It means tonight. For me, it's tonight. After delivering 4 consecutive 75 basis points hike, the US Central Bank is widely expected to increase interest rates by 50 basis points as it concludes its two-day meeting on Wednesday. So today we have FOMC meeting. So it is highly expected that they will be going for 50 basis point hike instead of 75 basis point hike because of the previous inflation data. Okay, so my dear friends, if Fed increases the interest rate by another 50 basis point instead of 75 basis point, then we may see further upside on the chart of gold and further correction on the chart of DXY. So this is the chart of gold right now. So my dear friends, hopefully it went pretty well with you. But sadly, in one more article I read that thousands of traders are trapped right now. Okay, they took a buy position somewhere around here and they are trapped. In my pro trader group, we took a buy position somewhere around here, 1813 1814 level, and we did pretty well. Okay, but as per the data, as per few articles, okay, most of the traders are trapped right now and they are simply waiting for the Fed's data because they are expecting that market would fall, DXY would fall, and they will be able to exit because there will be an upside on the chart of gold. Okay, so first of all, if you look at the chart of gold right now, then we can see that after this sharp up move, there was a sharp fall as well. Okay, there was a sharp correction, and right now gold is standing at the previous resistance of 18.9, 18.10 again. So if we keep aside the CPI data, then gold is back into the old position. So right now you can see the market is full of dojis and spinning tops, and dojis and spinning tops signify indecision in the market. If you had a good trading, okay, if you had a good trading opportunity yesterday and if you have made good money, then I will request you not to trade. Okay, not to trade for the day and just observe the market. If market comes to the right place, then you can go for a small buy or sell opportunity, but otherwise it's better to avoid the market if you had a lovely CPI. Okay, CPI trading. So my dear friends, again I'll say that if you observe the market, then you can see that gold is right now standing at the previous resistance here. So more or less gold is back to the no trading zone again. So as a result, it's better to avoid any position in the market right now. Before FOMC, okay, before FOMC, before Fed's meeting, if gold comes to 1805, if gold comes to 1805 level, and if you see market taking support, then you can take a buy position. Why 1805? Because right now we can see that more or less market is showing spinning tops and dojis. Spinning tops and dojis signify indecision in the market. Why indecision? Because the number of buyers and sellers are almost equal. So in this situation, there's a good chance that before FOMC, yes, I'm repeating again, before FOMC, market will take support around 1805 and market will bounce. If market bounces according to our expectation, we can definitely go for a buy position. On the other hand, if market breaks it, okay, if market breaks it, no need to take any sell position. Just wait for the market to come down to 1800 level. 1800 is our second support for the day. The reason behind considering 1800 is we are using Fibonacci retracement here. Okay, we are not only using Fibonacci 50% retracement here, 1800 is also a psychological support for the market. In my earlier videos also, I have discussed that these round figures, they work as psychological support and resistances. So as a result, 1805 is the first support and 1800 is the second support, and then we have 1795 as the third support for the day. Keep in mind these three support levels are only for only will work before FOMC only, because after the FOMC statement there will be again sharp move in the market, and as we all know, whenever fundamentals dominate the market, usually technicals fail. Okay, that's a bitter reality of the market. So before news, hopefully the volatility of the market will remain like this, and if market comes to the support levels that I mentioned, when 1805, 1800 and 1795, these are the support levels. If market comes to the support level, observe the market. If market bounces, you can go for a buy position. You can expect a profit of 40-50 pips. Okay, on the other hand, we have 1821 to 1824 as the resistance on the market here, which is also the trap of the buyers, because yesterday many thousands and lakhs of traders took a buy position around 1820 1821 level, and they are trapped right now. So market may go up again. So if market goes up before FOMC, observe the market around 1821-24 level. If the volatility of the market remains like this, then obviously market will not be able to break it, because for a breakout we need what? We need volume. Okay, so if there is no volume, then obviously market will reverse. We will see price rejection from above. If market reverses from the resistance zone, we can definitely go for a sell position as well. But as long as market is trading between these two zones, try to avoid taking any position in the market right now, because see, one thing you must understand. See, whenever there is volatility in the market, okay, market usually prefers to take risk the next day. So yesterday we had CPI, market showed extreme volatility, market showed extreme upside, an up move of around 350 360 pips, which is not a matter of joke, okay, in just 2 hours. So after that up move, market is right now taking a risk. It's also known as volatility contraction pattern. And again market will have to show some disco moves today, so obviously market will take risk. So volatility will again play a big role. Observe the market and take the decision accordingly. Okay, preferably before FOMC the volatility will remain like this, and if possible try to avoid taking any position here, because if you take a buy position because of low volatile situation, market may come down again. One thing you must understand, that if you have already taken a buy position somewhere around here, then apart from waiting, there is no other option. Okay, apart from waiting, there is no other option. Just put your stop loss. Okay, just put your stop loss somewhere around here and just wait. Okay. This is it. Hopefully you understood. And after FOMC, okay, observe the market, because market will show some volatility. If market breaks 1825 level, okay, if market breaks 1825 level, observe the market and see. If you see the market is trading above 1825 level for 20-30 minutes, if you see the market is trading comfortably above 1825 level for 20-30 minutes, then we'll get the confirmation that okay, market is trying to make the previous resistance the new support. Okay, so you can take a buy position above 1825 level, but do not take a buy position immediately, because you need to protect yourself from false breakout as well. That is very, very important. If you see market sustaining for 25-30 minutes, then only take a buy position above 1825 level. And in case market starts falling, then we have the trend line, we have the moving averages. I cannot give you the exact number because it's a dynamic support. So around 1790, okay, around 1790 91 level, you can expect the market to take some support, okay, around the trend line or around the moving average. If possible, try to insert the moving average. I'm just using the 200 moving average here. Okay, you can just insert the 200 moving average or draw a trend line like this. Around 1790 market should be taking support in case market falls. So FOMC will bring some volatility. Please be careful because your strategy should be different before FOMC and after FOMC. Do not gamble with your hard-earned money. Bye bye. Take care.